Hello, this is Frank Fortunato with CATEX TV. Today is Tuesday, October 4th. Well, we were in London last week, and the buzz there is all about Tom Bolt's famous letter to the market written back in July about offshore energy. Let's talk a little bit about it. Mr. Bolt has accused offshore energy underwriters of, quote, not robustly managing risks, and warned that the market must catch up with the significant changes in regulatory and legal environments that have occurred since last year's BP disaster. The points come after Bolt issued his letter at the end of July. As part of Bolt's recommendations, in fact, there are now requirements, insurers must separate out energy liabilities and write them on a standalone basis outside of a wider package. The practice now of splitting out the liability portion of the offshore energy book has to be adhered to if Lloyd's underwriters are to have their 2012 business plans approved. Bolt noted that risk aggregations are difficult to assess and manage owing to the lack of transparency. The approach, he said, is not sustainable. He said there's a material imbalance between premiums charged and exposures assumed. Offshore Lloyd's energy writers have more than half the business in this class around the world, the majority of which is for risks in North America. Yet the premiums received for such a volatile and potentially litigious market are nowhere near adequate. Bolt said that the economics simply don't work. Now, that's pretty much common sense. However, the reaction of the market is different. Lloyd's is going to miss out on business if its energy insurers are forced to underwrite liability risk on a standalone business and not into packages, with the company markets, i.e. non-Lloyd's, set to take advantage of the situation. This is according to a leading market broker, Lloyd & Partners. Lloyd & Partners said that if Tom Bolt's rule is adhered to, Lloyd's underwriters could miss out on business. They also said that insurers will challenge whether or not Bolt's Performance Management Directorate has the power to be able to implement such a thing. Lloyd & Partners said, we either see Lloyd's underwriters losing out to company markets, who may still be willing to include liabilities in packages, or seeing them begin to question whether or not the Performance Directorate can enforce such a law. Well, Bolt is in a tough position. What Bolt is trying to do is to get the underwriters in Lloyd's to adhere to reality. He's telling them that they need to price their product appropriately. Amazing. In Dallas yesterday, a fire started just south of the city, forcing about 1,000 people to evacuate. It was at a chemical plant called the Magna Blend facility. Nobody was injured, or people were allowed to return to their homes later in the day. Tropical Storm Philippe is about 720 miles southeast of Bermuda. It's got some winds now about 70 miles per hour. It could become a hurricane by late tomorrow. Stephen Catlin has been honored by Ernst & Young as Entrepreneur of the Year in the UK. Mr. Catlin began his company with £25,000 of loans back in 1984. Now has turnover of $2.6 billion. Good for him. China's foreign ministry has said it firmly opposes a bill in the U.S. Senate that would allow the United States to impose duties on countries that undervalue their currencies, i.e. China. Well, if the Chinese intelligence service read the newspapers, they'd know that now 18 days in a row, protesters in Wall Street and around the country are showing their anger over the economy and corporate greed. More demonstrations are expected to continue this week. In Manhattan yesterday, hundreds of protesters dressed as corporate zombies in white face paint lurched past the New York Stock Exchange clutching fistfuls of fake money. In Chicago, demonstrators pounded drums in the city's financial district. Other protests occurred in Boston, St. Louis, Kansas City, and Los Angeles. One typical protester said, we feel the power in Washington has actually been compromised by Wall Street. Well, the Chinese currency restrictions actually may come into effect this time. There's enough anger out there and jobs need to be created. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.